Hi there. My name is Victor Alui, and I'm the head of investment advisory at Sankore Global Investments. And this is your weekly financial markets roundoff. We start off as usual in the US markets, where stocks were little changed on Friday in what you can describe essentially as a pause from the strong performance that we essentially had seen pretty much the better part of last week as investors weighed the latest information on the tariff and the inflation front. So on Friday, the Dow lost 0.37%. The S&P was down by just 1 basis point, while the Nasdaq added 0.41%. Nevertheless, the three major indices ended the week in positive territory as sentiment improved after investors essentially got a bit more clarity really around tariff plans, and also as inflation data turned out to be better than it had initially been thought. We also essentially saw traders shrug off, the weaker than expected retail sales that we saw on Friday. So basically, for last week, the S&P added 1.5%, the Dow gained 0.6%, while the Nasdaq was 2.6% higher. And most of the gains last week really came on the heels of President Trump signing a memorandum, essentially laying out a plan to impose reciprocal levies instead of implementing immediate tariffs. And this created, if you will, some sort of reprieve in the mind of investors. Also, we saw inflation data last week, and the data seemed to also calm sentiment, as well as it pointed to sort of like a softer PCE reading, which is due later on this month. And of course, the PCE is the Fed's preferred gauge for inflation. So the CPI and the PPI data that we saw kind of hinted at the fact that we are likely to see a softer PCE reading. And this, of course, softened sentiment, if you will, and kind of turned sentiment positive, in the markets. Going into this week, really, it's a holiday shortened week. Today is President's Day, so the US market will be closed. But, for the remainder of the week, we will have quite some Fed speak. The San Francisco Fed president will be speaking. Also, the Chicago Fed president will also, be speaking, as well as the fact that the minutes for the January Fed meeting will be released on Wednesday. Obviously, market will be looking to, get some clues from those minutes as well. And we also have initial jobless claims data due out, later this week as well. So for the remainder of this week, really, as far as the U.S. market is concerned, a lot of that Fed speak, the January Fed minutes as well. Also, on the earnings front, the market will also be looking to see some of the earnings that will come out this week, and I'll sort of get an indication of where those companies are headed, and essentially the implications for the broad markets. Over in the UK, the UK economy essentially eked out a 0.1% growth for the fourth quarter of 2024. This was better than had been expected. As a matter of fact, analysts had expected that we'd see a 0.1% contraction, just on the back of the fact that, the economy had essentially flatlined over the last 3 months. So the service and construction sectors were the major growth drivers. And in the aftermath of the release of this result, the British pound was up 0.4% against the US dollar. Sluggish growth, and a recent drop in inflation saw the BOE executing its first rate cut this year, bringing its benchmark rate to 4.5%. And had essentially hinted at even, further rate cuts as inflation kind of waned. It, however, warned about, global inflationary concerns, and also then went ahead to have its, 2025 growth target from 1.5% to 0.75%. Over in India, inflation fell for a third straight month to 4.31%. And obviously, this creates more impetus for the Reserve Bank of England to cut rates even further after commencing easing for the first time in 5 years, just only last week. The Reserve Bank of India is, however, concerned about, the impact of lower rates on the rupee, which hit a record low earlier this month and has been under quite some pressure from, the strong US dollar. So obviously, as you kind of ease monetary policy, it has a negative impact on the strength of the rupee. And this obviously has an impact on its trade balance and all of that. So again, that is something that the Reserve Bank of India would certainly have to consider very strongly, and think about that very carefully. If it would then be a path where it will continue to soften or loosen monetary policy. It also expects that growth this year will come in at 6.4%. This is sharply lower than the 8.2% that we saw last year. And still on GDP growth in Japan, GDP for Q4 of 24 came in better than expected at 0.7% quarter on quarter, more than the 0.3% that had been expected. And on an annualized basis, GDP grew by 2.8%, much higher than the 1% estimates. However, if you look at full year GDP, slowed to just 0.1%, sharply lower than the 1.5% that we have seen in 2023. And the jump really in Q4 GDP was boosted by a rise in exports, while domestic demand remained a drag as it contracted marginally. And obviously, again, the Bank of Japan has recently commenced monetary tightening, raising interest rates for the first time since 2008. So if you look at the sort of growth that we're seeing in the economy, and you look at the monetary policy path that the BOJ is towing, it is something that the BOJ will certainly have to think very critically and carefully about. Even in the fact that inflation is sort of easing, with the sort of sluggish growth that we're seeing, this could be very concerning and could create very significant problems further down the road. So clearly, the monetary policy path really for the BOJ is not an easy one. We'll continue to keep an eye out for what happens there and continue to monitor developments on that front as well. Over here in Nigeria, the fixed income market, it was quite active last week. The Treasury bills market, we saw, pretty much sustained demand, and a bit of liquidity restraint led to some sort of sell-off. However, we in the aftermath of the announcement of an home auction, a bit of caution sort of kicked in. However, again, in the aftermath of the home auction itself, we saw quite some strong demand as unmet bids at that auction filtered through into the secondary market, and this essentially led yields even further downwards. If you look at the OMO itself, the CBN floated about 600 billion, got subscription of about 1.33 trillion. Ended up selling about 795 billion, and stop rates, closed at somewhat lower. If you look at it, particularly on the 1 year paper, 21.45, and this, significantly lower than the about 24 that we were seeing a couple of months ago. And again, this is just reigniting sentiment that, these high interest rates are, going to be a thing of the past pretty soon, and that the monetary authorities are, really looking to bring those rates further down, particularly as there seems to be a semblance of stability on the price stability front. Again, really remains to be seen if this will be sustained. We've been here before. We saw this a couple of times last year where, rates kind of dropped and they went back up. It really remains to be seen if, this sort of drop that we're seeing will be sustained. And this sentiment sort of filtered through into the secondary market for the bonds market. And, we saw a really bullish trend, and, yields, dropped on an average about 7 basis points, across the curve. Again, towards the end of last week, the bond market, the market in general became sort of somewhat cautious as, it looked forward to the outcome of the MPC meeting that will be happening this week. So for the local markets, I think that the outcome of that MPC meeting would, determine really what happens in the market, at least in the near to the medium term. While for the global markets, I think that, traders will still keep their eyes peeled for what comes out of the White House, what the president says. This would really, really matter a lot in determining what happens to the market, at least in the near, to the medium term. That's pretty much it from our end. Thank you very much for your time. Do have a very, very productive week. Thank you.